All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're talking about not the top 10, but the top 5 Warren Buffett stocks of February 2024. So with this being February 2024, it is currently February 4th. We are going to dive into Warren Buffett's top stocks. For those of you who don't know who Mr. Warren Buffett is, he is pretty much an accredited investor, and he is basically a net worth over $100 billion due to his long-term stock investments. And today what we're going to do is I'm going to show you his top 5 Warren Buffett stocks, as his name imposes. He is Mr. Warren Buffett. And we're going to look through how much exactly he has invested in them, what those companies are, and we're also going to dive into a little bit about their payouts, their stock price history, and to really debunk why is he investing in these stocks. So if that does sound good, please do remember to subscribe. We're up to 4,061 subscribers, so I want to say thank you to everyone who has subscribed. You are making my day currently, so thank you. And if you have subscribed, leave me a comment down below, and I'll be sure to respond to you. So, Warren Buffett's top 5 stocks. We're starting with number 1. We got Apple, okay? And I'm actually pretty excited to make this video. I know it's a little different from the standard high-yielding videos as my screen goes black here, but you know what? We're coming back. We have Apple, ticker symbol AAPL. But before we get into that, what I do want to say is Warren Buffett has a key rule. We call this Warren Buffett's rule number 1. And that is basically never lose money. And number 2 is never forget rule number 1. So Warren Buffett's strategy is basically looking at everything long-term. He wants long-term stocks that appreciate over time. We got the 1-month chart up here. It's black, but now we got the max chart up. You can see here over time, we have Apple, which is appreciated. We're looking at the stocks. We're moving to their max history. And these are all stocks that have appreciated well over time. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So we're starting with Apple. So Berkshire's stake is about 5.9% of all Apple shares, which accounts for almost $180 billion in Apple. Now, Apple is close to a $3 trillion market cap. $180 billion invested at Apple. That is crazy. So almost half of Warren Buffett's stock portfolio is invested into Apple. And Apple is obviously, you guys probably know what it is. You guys probably have an Apple product. Maybe you're watching this on an iPhone or on a MacBook. But you could see here, Apple over the long term has appreciated very well. I'm going to go to the 5-year chart so it's a little more clear. They have a extremely small dividend. We're talking 0.52%, not 52%, 0.52%. And this is a $3 trillion market cap company. This is a company that has grown since, we'll call it about 1985 or so. And it's a company that's obviously taken off. There's not much really to say. It's a pretty stable company. This is a stock that if you think about stock market investing, you most likely jump to Apple as the first individual stock that you're looking to purchase. And that's what Warren Buffett has a majority of his portfolio in. The next one, Bank of America, ticker symbol BAC. You can see here, once again, a stock that pretty much appreciates over time. You can see that in 2007, it had a massive drawdown here, which you could present as an amazing buying opportunity. But obviously, you know, with the housing market crash here, that was a big risk you were taking on. But over time, Bank of America has done very well. And like Warren Buffett, in his rules, he's buying things that don't lose money, that are only going to appreciate up over time and accumulate. And with a 2.87% dividend, still a small dividend, but you got to remember when we're looking at these stocks, one thing that is crucial to keep in mind here is also the dividend growth, because these stocks should be growing their dividends every year. We see here 24 cents is the current dividend, but when we go all the way back, we're looking at a 1 cent dividend. After 2009, you can see they kept that 1 cent dividend for a couple of years. Then they bumped it up to about 5 cents, 12 cents, 18 cents, 22, and now 24 cents. So he's buying companies that are growing their dividends over time, growing their share price over time, and they're not losing money. The third company that we're going to check out, by the way, BAC, 8.7% of his portfolio, Berkshire's portfolio to be exact. Now, the third stock, which I actually heard Warren Buffett talk a lot about, not to me personally, I wish, but 7% stake in American Express, $25.6 billion. Now, when we look at American Express, same exact story. It's a great company, $150 billion. They are a credit card company, but I'm sure they do much more. They pay a 1.16% dividend, so nothing crazy, nothing that really stands out here that's like, wow. But the stock price chart obviously does because they appreciate well over time and they go up over time. They do not lose money. That is Warren Buffett's rule. Now, going back to the fourth stock, Coca-Cola. Have you ever seen Warren Buffett without a Coke in his hand? He is the marketer for Coca-Cola. And obviously Coca-Cola does a lot of other marketing too. But a 6.5% stake for Berkshire, which is a $23.5 billion investment. And Coca-Cola, like all the others, I'm pretty sure in the recent time, it's kind of been a little bit slower of an investment. You're looking at a stock that's only paying a 3% dividend, give or take a couple, tenths of a percent, but has remained relatively flat. Look at this. March 2019, $46. Sure, to $60, that's cool. But if you actually bought in April 2020, you'd be down $4 per share that you bought, excluding the dividends, of course. But over time, Coca-Cola has trended upwards, and I'm pretty sure Warren Buffett bought a huge stake back in the 90s or the 80s, which obviously would be worth a lot more today. So he's obviously bought these stocks, but he's also held them for a very long time and allowed those dividends to compound. I'm pretty sure the dividends he's receiving now from Coca-Cola are completely outweighing his initial investment. Like, he's receiving more yearly than his initial investment, which I think is super cool as well. The fifth and final stock we're going to mention in this video is CVX Chevron Corp, a $4.3 billion portfolio stake and a $15.7 billion purchase. So for Chevron, we're looking at the biggest dividend yield here, which is still not very big, 4%, 4.05%. We're looking at almost a $300 billion market cap company. These are all large market cap companies that he's buying. Stock price over a long period of time, it wasn't the 1 month, it is the max. We're looking back to 1985. Once again, does not lose money. Don't forget rule number 2 as well. Never forget rule number 1. And Chevron, same thing. Continues to appreciate upwards over time. We could say the same thing over and over and over again, but it's truly worked for Warren Buffett. He's a very successful investor, has over $1 billion, and his company, I'm pretty sure, has over like a $500 billion market cap, and it's because he's invested in these long-term stable companies over time. Now, of course, on our channel, we look at some very unstable companies. We look at some very unstable ETFs that pay obviously a lot in dividends, and with that massive amount paid in dividends, it obviously takes a hit on the market cap and the current share price. But with these companies, they pay such a small dividend that you can almost exclude the dividend from the share price because it is such a minor fraction to the actual share price. So with all that being said, these were the top 5 companies. We were looking at Apple, Bank of America, American Express, Coca-Cola, Chevron. We really didn't dive deep at all into any of these companies. I just wanted to show you what Warren Buffett's top 5 stocks in his portfolio, if you were interested, were, to remind you of his rules and what he says, because obviously he's a pretty amazing investor. Him alongside Charlie Munger. Rest in peace to Charlie Munger. We lost him, I'm pretty sure, late last year. And those two have really made a powerhouse, Berkshire Hathaway, and they will continue to compound those dividends as they obviously continue to grow over time and the stocks continue to appreciate over time. So I hope you guys did enjoy this video. If you did, and you are looking for some more long-term ETFs, stocks, anything like that, we cover some high yielding stocks, but now we're trying to get into some lower yielding stocks. So if you guys are still with me, please do remember to subscribe. Up to 4,061 subscribers. I want to say thank you guys for watching this video. Thank you for sticking with me. I hope you guys enjoyed, and I will see you guys in the next video.